Hello everyone, and thank you for joining me in today's webinar. It's the beginning of a new trading week. Today is the 10th of March, it's Monday. And of course, as usual, we'll have a quick look on the markets. What are you expecting during this week? And basically, we might have a really good trading week when it comes to the technical analysis, just like the previous one. You know, the previous webinar was quite great when it comes to the technical analysis and expectations. We saw this downward move happening on gold before actually it happened, and a lot more. So maybe this week will be pretty great when it comes to technical analysis, because sometimes you'll see me tell you, okay, markets are not great, markets are not moving in a good manner when it comes, to price action. However, there are times just like today when you will see me, okay, tell you, right, markets are good. Markets might offer us a lot of opportunities, trading opportunities during this week, and it's my job to get you prepared as much as possible to know when those scenarios happen, how could you trade those scenarios to make the most, profits out of those expected scenarios during the week. So without further ado, let me start by having a look on the economic agenda. And basically, I only highlighted the top important events here. Just a moment. So having a look on the economic agenda on the 11th of March, starting tomorrow, because basically today we have nothing pretty much of high importance that we should expect. So starting tomorrow, we do have the GDP from the Japanese economy and the job openings and the labor turnover survey, which is the JOLTS, job openings for the month of January. And as far as I'm concerned, there isn't basically a big move expected, So the previous reading was 7.6, and the outcome, or the expected outcome, is 7.7 million only. Moving forward to Wednesday, the 12th of March, what do we have? We have the CPI, the Consumer Price Index. So when it comes to the core CPI on a monthly basis, it's basically expected to go down a little bit, hopefully, because we haven't had, we haven't seen this downward move in inflation in a couple of months now, maybe. So moving down from 0.4 to 0.3 is something that markets are currently expecting. When it comes to the headline inflation, or the CPI as well, it's expected again to move lower from 0.5 to 0.3. And okay, the main, or the headline inflation, the CPI, on a yearly basis, again, is expected to move lower from 3 to 2.9%. Let me get the core CPI on a yearly basis. Not sure why this is not flagged as high importance. The core CPI on a yearly basis, it's again expected to move lower from 3.3 to 3.2. So just a general outlook of the inflation numbers during this week. Expectations are for the inflation to move lower on, in the US economy, which could be really good news finally, because, it has been consistently moving higher for the previous couple of months, which is not a really good news. We also have the crude oil inventories numbers, no any expectations, and another 25 basis points of interest rate cut is expected as a move from the Bank of Canada for this week's interest rate decision. Okay, so if we have the CPI on Wednesday, most probably, or most often, we will have the PPI, or the Producer Price Index, the following day, which is the 13th of March. Again, is expected to slightly move lower when it comes to the headline number, or the main Producer Price Index figure for the month of February. No any big changes expected when it comes to the initial jobless claims. Again, only around 5,000 new claims expected during the previous week. And to be honest, that will be it when it comes to the economic agenda for this week. So not a lot of fireworks expected. It's only the CPI, let's say. So yeah, tomorrow the job openings is important. And on Wednesday, CPI is really important. And I don't think anything else would be of importance. Even the PPI, it's not, it's important, for the general economic outlook. However, it hasn't been, driving higher volatility than usual. What do you think about the European investment in army and military industries? It is a push for gold or not? That's a good question. And it's not. I don't believe, because the Europeans are investing at the moment in army and military because of what's happening recently with NATO and with Donald Trump not supporting NATO any longer, especially what's happening in Ukraine and so on. So they came to a conclusion is that, okay, we are on our own and we need to invest more in the army and military and so on. However, as far as I'm concerned, at the moment, it's a long-term plan. We still want to know what will happen, in Ukraine on the short term, but I don't think this could turn out, to be a full-scale war between Europe and Russia at the moment, because I don't believe, it's just my personal opinion, but I don't believe they will have, the military capacity at the moment to do this. So it's a long-term thing. It's not, something that should drive, a risk-off sentiment in the market on the short term, but let's wait and see. Okay, moving forward to the charts, and here is where things will get exciting. Why? Because I'll tell you something, when you have a sharp move in either direction, either lower or higher, it's really good for you to anticipate the correction. So during the past whole week, look at the weekly candle on the dollar index. We lost around 3.4%. That's a huge, weekly candle on the dollar index here, right? What usually will happen is when you have a very big candle like this, you have one of two scenarios. Either the next candle will be another bearish candle, which is totally fine, or a bearish candle, right? I know what I'm saying so far is basic, but just hold on with me. In both scenarios, either this candle will be a bearish one or it will be a bullish one. When the new week starts, you might expect that there will be a rebound. And this rebound is something that I'll be personally looking to trade. Okay, so on the daily time frame, we have been moving lower. We have reached the levels of, let's say, 103.50, which is a really powerful support. And you can see this here on the daily time frame, right? So that's for the daily. On the 4-hour time frame, this is where things will be really exciting here. The move lower targeted the levels of 103.50. Recently, we have been doing nothing around here, okay? And momentum is showing a huge bullish divergence. So something in me says that, okay, as far as I'm concerned, the levels of 103.50 will hold on as support. Maybe not during this week, but at least during the beginning of this week, okay? Moving forward to the 1-hour time frame, you can see we moved way lower during the previous week, right? But recently, we have been moving in a sideways range above the support, which is the 103.50. where is the last resistance? This is the last resistance, the 104.02. Let's say 104. I'm highly waiting for the levels of 104 to be broken above, because if this happens, you will have a very clean change of character between or after moving lower. You have a series of a sideways range, and once we break resistance, this one is here. Let me make it something like this. So once we break this resistance, we will have a change of character and we will continue moving higher. Not for a reversal, not specifically that we will see a reversal, but maybe for a retracement. Because don't forget, the previous week was basically a very bearish one. So when we want to check for retracements, we look for Fibonacci retracements, right? Okay, wait, let me edit those. So I don't want to extend those lines left. I don't want those. I just want the 50%, 0.61. Maybe this one, and that will be it. Those will be my targets. Because if we went higher for 105, at least, that's, you know, the smallest retracement that can happen. So we were expecting a move from 104 to 105. That's a 100 pips move on the dollar index. The key thing to happen is we need a 1 hour break and close above 104 points during maybe today or tomorrow, or as long as it takes, as long as we don't basically close below the 103.50. Because in case we close below 103.50, you don't need me to say, okay, you will just continue shorting the dollar. That's really simple. And that's why I'm telling you markets are good. Because currently we are trapped between 104 and 103.50. If we break 104, it's a definite buy to 105. If we break below 103.50, wait, it's a definite sell to, come on, no target. Just open the target and just follow the move lower. But I don't really see, or I see both scenarios happening, either or, but you know, I'm more biased towards the bullish scenario a little bit. So I'll be waiting for a break above 104. Once we break and close above this, I'll be buying the dollar. On the other hand, of course, if you have been following me for some time, you know what I'll say. Look at this on the euro versus the dollar. Don't forget, we have followed the euro during this whole change of, you know, structure that we said it can happen gradually. However, we had bullish targets. So currently we are trading just shy around 1.0870, right? And this is a really powerful supply zone because it's a move higher, what we call as rally. We didn't really have a base. We can say it's a pivot point, and then we have a drop. So this is supply. We reached the levels of 1.0870, and we are currently trading just below. When you look at the 4-hour time frame, you can see how much the euro is just overbought at the moment, with very clear signals of a bearish divergence, with something like, I don't know, maybe a wedge or a price channel forming here. Yeah, so we might move a little bit higher to 1.09, but I don't see, you know, any bullish scenarios, a long-term bullish scenario on the euro during this week. So again, what I'll be waiting for on the euro during this week will be a break of the last low. So let's say the last low here is around those levels of 1.0825. Once we break below, I'll be shorting the euro. Again, where's the target? Look at Fibonacci retracement levels, but this time on the euro, right? Wait. Here we go. So the first target should be 1.0686. So currently, let's say, I think this would be more clear on the 1 hour time frame, right? Wait, yeah, it will be more clear on the 1 hour time frame. This is the last low, 1.08. Let's say 1.08. And there are clear signs of consolidation just below the resistance. Again, if we break above the resistance, it is what it is. I'll just be buying the euro for another leg higher. However, the retracement will happen and it will take place once we close below the 1.0805. Look at this trade setup that could happen. So you'll be shorting just around here. The stops will be around here. And the first target is 1.0686. Maybe a decent 1.3 risk to reward ratio is something I'll be expecting because, yeah, there is demand here. If we break below this, we'll be moving for a second target, another demand here, which is 1.0623. This will give you a total of 2 to 1 reward to risk ratio. So you get what I want to say is that currently the dollar, the euro, and even the pound, we have had a brilliant week last week, brilliant volatility, and a directional move. And during this week, it might be time to pause and to retrace a little bit. On the pound, again, it will be pretty much the same. If we break below 1.2870, where are we going? Look at the Fibonacci retracements with the clusters. You can see that the 38.20% again is a kind of supply. That will be the first target. A move lower of around 70, 75, probably 80 pips is something that could take place. So yeah, this is why I'm telling you that, okay, maybe markets will be good during this week. When it comes to gold, it's definitely bearish. Yeah, and there are only a limited number of times that you will see me say with a great confidence, like more than 90%, that something is bullish or bearish, because I always like to be humble when it comes to markets. But there are sometimes, it's just bearish. There is no any possible scenario for me to look for, going bullish. Simply, you can see that was the highest high that we reached, right? We had a brilliant move lower. We broke the previous lows, so that was a change of character here, right? We had a lower low, and when you have a lower low, it's no longer an uptrend. We had a retracement, and here we have a lower high. So a lower low and a lower high. What is it? It's a downtrend. So although we had a lot of time, trading around this really small consolidation phase, however, I can see it now that we are trying to move lower. Okay, so once we just break, oh, we already broke below. That was the last support. So we have our targets around 28.85 and let's say 28.63, probably maybe even the last low. Yeah, I'm bearish. I am bearish gold. I don't think I need to explain more why I'm bearish. It's really simple. Lower low, lower high, consolidation, supply. We rejected once, twice, 3 times. If we break below the support of this tiny consolidation, that's your entry signal, and the targets are as follows. Again, What do we have on US oil? We have been moving lower, way lower, right? Reached support and moving higher. And of course, on the 4-hour time frame, you can see bullish divergence. Exactly like maybe the dollar, the euro, everything we have explained. However, the targets on the crude oil will be a lot, more early or smaller targets, because the price action generally isn't the best. Even on the way down, it wasn't really a smooth way down like the dollar or any other thing else. So yeah, it was a directional move. It was a downtrend. However, we had a lot of support and so on. So I would like to be conservative with my buys on US crude oil. Let's say I'll be more than happy to, cash out at 67.87. So probably 50 pips, 60 pips from here is where I'll be happy to end the position. What kind of momentum divergence do we have on gold? That's a good question. And you wouldn't expect to see momentum here or divergence because it has been consolidating for some time. Divergence works best when you have a powerful move or a powerful directional move. But in this case, generally, you can see that from the levels of supply, it's a really small or tiny bearish divergence. Yeah, a bit bearish, exactly. You see what I see. It's not, the best bearish divergence. It's not, I'm not sure if there's even, yeah, there is. Wait, no, there isn't a bearish divergence, but generally momentum is bearish. After, breaking above the 70 or even the 80 higher, we are moving again lower. So it's bearish divergence or bearish momentum generally. Shall we wait for confirmation? My confirmation will be breaking below supports. This one, which is 29. Let's say 1 hour candle close below 2900 will be my confirmation. I wouldn't really need more confirmation. That would be it. And I'll start, shorting gold. What is happening to the Dow Jones? Again, a really powerful move during the last week. However, if this is not a clear sideways range, I don't know what a sideways range is or a clear sideways range. It's really simple. You have support, support, resistance, resistance, a little bit of price action in between. Why is that? That's the equilibrium. We actually rejected resistance. We broke below equilibrium. Where's the next target? It's definitely the support. So I'll be waiting for the Dow Jones around the levels of 41,700. This will be the demand zone I'll be looking to buy from during this week, and pretty simple. When it comes, to the lower time frames, you can see a lot of volatility, a lot of terrible moves, and that's why I wouldn't really trade it at the moment. However, if it moves below, wait, because this is really bothering me at the moment. Yeah, on the bigger time frame, it's pretty clean. Looks, bearish, moving lower, and you can see here we don't have any supports, so it's a clean price action. So we will be moving lower in the same clean manner. So I'll be waiting for the 41,700. Shall we sell now? No, we shouldn't sell, because as I said, on the 1 hour time frame, the whole thing, the price is just all over the place everywhere. So it's not clean price action for you to sell. I'll be waiting for the Dow Jones around the demand of 41,700. Please let me know if there's any question that you want to leave. I think we are done with questions, right? Dollar CAD is bullish. Dollar franc is not good. Australian dollar is bullish. New Zealand dollar a little bit bullish. Let's have a very quick look. The euro pound is bearish, really bearish. Maybe. But I don't like the euro pound. It's a very weak volatility pair. Euro yen again is bearish. Very clear sideways range. Resistance supports ping pong trade. Just rejected resistance on the way down. Euro Canadian. Oh my god, no price history. I don't care. Euro franc. A little bit bearish. Okay. Yeah, I think I'm done. So hopefully this will be a really great trading week. Thank you so much for attending this, guys, and I'll see you again next week. Please trade safe and please stay safe. Goodbye.